Well, on the credit growth, it should have a positive impact. And as we said, the margins this time, if you saw it, it was at 3.54. But we expect to be able to hold the margins at 3.5. Now, the reason we believe this will happen is because we've seen a large amount of growth in the investment book last year on account of very little credit demand. This time we are beginning to see credit demand come back. This is only the very slow season. As you know, the first quarter is always very slow. But whatever proposals are coming, they are proposals for enhancements. We are also getting some new projects. So overall, we are quite optimistic that this time the credit growth will go up. And if that happens and I'm able to allocate more funds to the loan book rather than the investment book, then that should help me to still maintain margins even though we have cut base rates.
But how much more headroom do you have? That's the question. Even Governor has pointed out that he will wait for banks to pass on the sequence of rate cuts before he takes a final view on cutting rates further. So how much more headroom do you have?
Now, if you just consider when was the repo rates at 7.25? The repo rates were at 7.25 in May of 2013. At that point of time, our base rates were 9.7, which is precisely what it is today. Actually, what had happened was that the RBI had raised repo rates by 75 basis points. We, in our turn, raised base rates only by 30 basis points. So while RBI has come back to that same level of May 2013, we too have reverted to the same level of May 2013. So because we did not go up as much as RBI, it's difficult for us to cut any further. If you can understand. So RBI was at 7.25 in May 2013. We were at 9.7. Today again RBI is at 7.25 and we are also at 9.7.
Cumulatively speaking, how much have you passed on in terms of rate cuts in both deposit and lending rates so far? We've seen 75 basis points and we've seen 30 basis points cut in base rate. But cumulatively, both on the deposit and the lending rate, how much have you passed on?
You cannot call it cumulative passing on, because when base rates, when they are cut, then automatically the entire loan book reprices because everything is on floating rates. In respect of the deposits, there is no correlation directly with the base rates, excepting regarding cost of funds. And actually speaking, even though we have brought down deposit rates, the cost of funds actually has not come down on account of the fact that more and more people are coming into term deposits, fearing that the rates are coming down. So if you look at the growth of our retail term deposits, it was as high as 22% last year. Our CASA grew at 9%, which is better than the year before. But still, if you consider the percentages, the proportions, we still did not see any cost of deposits come down. Now, if you look at the deposit rates, how much has it come down? Now, it has come down by about 1.5%. But when the deposit rates were at 9%, inflation was in double digits. So basically, the depositors were getting a negative rate of interest. Today, the inflation is at 5.5%, and the deposit rates are at 8%. So the depositors are actually getting a real rate of around 2.5-3%, which is, I'm told, almost the highest in the world. So to that extent, you cannot really directly correlate the fall in base rates or the rise in base rates with exactly what is happening on the deposit side.
RBI has also sounded cautious, or probably over-cautious, on the impact of monsoon and the government's response to weak monsoon. Do you think these worries are justified?
I think, that we are being a little too anxious on these matters. We have tried to see when a monsoon was deficient to the extent that it is now being predicted. I think in 2004, monsoon was deficient by about 19%. But we found that in 2004, on account of good management of food stocking position, actually speaking, the impact was very minimal. So monsoon, I have said this again and I say it again this time, that what is important is not the quantity of the monsoon, but the quality, in the sense that the timeliness and the spread These are the two things that matter very much when monsoon is concerned. Second, that even if monsoons are deficient, then there are ways of managing to ensure that the food stocks are available, and that the logistical piece of it, that is getting it to the markets at the right time, that actually plays a very major part. Even in respect of certain things that were pointed out today in the RBI meeting, for instance, pulses. Pulses has a very small impact, very small measure in the numbers that come out. Not only that, if we are aware that there is a problem in the stocks, we can always resort to imports, and today commodity prices worldwide are very weak. So to that extent, this is not going to add too much to import bills either. So I think, overall it's a question of management. I don't really think that we should start panicking at this point of time because the monsoon has still not made landfall. I think we need to wait it out a little, and there is no reason to be so overtly negative.
You're not seeing any impact on rural demand or rural credit pickup?
See, rural credit pickup at this point of time is very difficult to say because the monsoon does need to make landfall, and only then we will see the renewals and the KCCs happening. However, this is the most busy season for the KCCs, that is the Kisan credit cards, which is basically the financing that is taken for crop finance. At this point, we have not seen any impact. But going forward, we have to see how it works out. Next month is very important.
One final question on marginal cost of funding. RBI had tweaked the calculation of a base rate. When do you expect to move to the new method of calculating base rate, which is by inculcating marginal cost of funding?
RBI actually has not tweaked it to marginal cost of funding. They are still looking at it. We ourselves don't think that that would be quite the right way to go about it. We have done a number of calculations, but it becomes a little difficult. You can do that only if you take the fixed deposits. But because we have a large amount of CASA as well, therefore, the marginal cost doesn't really reflect whatever is the direction in which the rates are moving. However, we have taken the buckets which have the largest amount of deposits, and base rates are getting calculated on the basis of that as per whatever is in vogue by the RBI at this point of time.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.